Talking about FMCG, then let's get in some corporate voices. We have the management of Godrej Consumer Products Limited, Mr. Vivek Gambhir, who joins us to talk about demonetization and how the company is coping with it. On demonetization, Mr. Gambhir, you had said that the India business is impacted by liquidity crunch more than demand crunch. This is what you had said the last time you spoke to us. So you said you also expect normalcy. Has demand recovered to normal yet?
Clearly, as we had indicated before, November was not a good month for the overall sector as a whole. What is encouraging is that we have begun seeing a pickup in December, and so things are definitely moving in the right direction. Our hope is that if this pickup continues, that things should start returning back to normal quite soon, and we're expecting full normalcy to be in place in the next 6 to 8 weeks, and a full recovery to be in place by the end of the fiscal year. So definitely what we saw in November has been reversed, and we are now seeing encouraging signs of a pickup.
All right, encouraging signs, full recovery in the next 6 to 8 weeks. But you had also said that you expect some market share gains coming in your hair colors and the coils segment from regional unorganized players owing to this demonetization. Has that happened?
A little bit too early to say. I think over time, demonetization will definitely positively benefit the larger, more organized players, because a lot of the regional players tend to rely a lot more on the wholesaler channel, and that's a very cash-driven channel. And so as you start seeing normalcy return back, we do expect this move to actually help the larger, more organized players. But share changes don't happen overnight. It will take a few quarters before you start seeing this reflected in the market share positions.
Okay. Hi, Mr. Gambhir. Good afternoon, sir. Now, input prices are increasing, and you've stated earlier that you've withdrawn the consumer offers in soaps, as well as taken about a 2% price hike in your household insecticide segment. Would that impact your volume growth?
I don't think so. I think a lot of the decisions around price increase depend a little bit also on the competitive position of each brand and the kind of equity that we have. On the household insecticide space, as you mentioned, it's a very small price increase, but we feel very comfortable that we will be able to sustain and increase our volume share. On the soaps side, as you've mentioned, we have withdrawn offers, and that pretty much implies almost an 8 to 10% price increase. Beyond that, we don't foresee taking any other additional price increases. We have palm oil covers that are quite comfortable over the next 3 to 4 months, and so while palm oil prices are going up, we are waiting and watching. But I think at this stage, it is good to get some more price-led growth in the market, and hopefully it will not lead to any erosion of volumes.
Okay. Also, you're rationalizing your ad spends, you're managing fixed costs. So do we see margins improve or sustain at these levels, or could there be even a decline in the worst case?
Our intent is to grow profits ahead of sales, and so we would like to continue to strive towards margin improvement. Clearly, over the next few months, we'll have to see if we can maintain this intent. As far as ad spends is concerned, we've just postponed the ad spends. I think November ad spends were at the planned levels. We have curtailed or postponed some ad spends in December, but as the economy picks up, as demand returns, we will look at again increasing the ad spends in Q4, because we have some fairly exciting innovations, and we want to make sure that we are backing these innovations.
All right, fairly exciting innovations, but over the last few months you had a few new launches. How is the performance of those launches, and what is your outlook on the launch pipeline? When do you plan to revisit it?
Over the last few months, we've actually had some very exciting launches, and so we've entered the out-of-home mosquito repellent category through a very innovative Goodnight fabric roll-on product. And a few months before that, we had launched a very innovative Deo Stick. We've launched a very exciting BBlunt hair color. So over the last 3 or 4 months, we've had, I think, some very major launches. Over the next few months, Our intent will be is to ensure that these launches are getting adequate investment and focus, and then we'll again revisit our launch calendar in the first quarter of fiscal year 17-18. Suffice it to say, a lot of exciting plans are there. We will take calibrated decisions a little bit based on the economic environment, but our hope and our confidence is very high that in 2017 you should start seeing a revival of growth in the FMCG sector. Over the last couple of years, growth in the sector has been somewhat lackluster. While we have done very well and we have grown at more than 2 times the home and personal care rate, at an overall level the sector growth has been on the lower side. We are feeling quite optimistic that next year you will see the revival of growth in the FMCG sector, particularly rural India.
All right. Do you expect a revival of growth in the FMCG sector and the rural business? So we've seen 9% volume growth in the last quarter, 3% in the quarter before that. Can we see 10% plus in double digits in FY18 then?
Absolutely. I think, again, we've delivered 9% or higher growth in the last 5 out of the 6 quarters, which shows the resilience of the model, and our focus strategy seems to be working quite well. The platform we've created, I think, is very powerful, and as economic growth returns, we clearly believe that we can better this, and we look forward to a double-digit growth in fiscal year 17-18.
Okay, so double digit for FY18, but what about the second half of FY17? Is there any sort of forecast that you can expect on what the volume growth picture could look like?
It's very difficult to say. I wish I could give you a more specific answer, but the situation is extremely dynamic. I think a lot depends on cash availability in the system. If you increasingly see more and more cash available in the system, that will mean things returning back to normal in the next few weeks.
Okay, so I understand. I don't want to put you in a spot on that question, but tell us about the revenue visibility then from the international business. What are you expecting in the second half?
A lot of it depends actually on currency. I think on a constant currency basis, things are looking very good. Africa continues to do quite well. Our Latin America business is doing well. Indonesia had a tough patch in the first few months of the year. We are seeing a gradual recovery. So on a constant currency basis, things are looking very good. I think there are some challenges as far as translation is concerned, which we will have to navigate. Good news is that from a brand equity perspective, from a brand share perspective, and constant currency growth perspective, the international business continues to do very well for us.
All right, the international business will do well, but any acquisition that we can hear about in the near future? You've been doing that a lot in your international business. What category and which geography can we expect any announcement in?
Not in this fiscal. I don't expect any near-term announcements. While we are on the lookout in Africa, in Indonesia, as well as in India, I don't think you will see any activity over the next few months. But we'll have to keep on trying and see if something comes up the next year.
All right, Mr. Gambhir, we'll leave it at that. Thanks very much for joining in and for sharing your views with us. So.